Welcome to PyUncut, where we break down the biggest stories in technology, finance, and markets in a simple and engaging way. Today's topic is something every Tesla investor, and even beginners in the stock market, should pay close attention to. There is massive news surrounding Tesla stock, and it could shape how investors view this company in the coming months. Let's start by looking at what is happening right now. Tesla stock has been under noticeable pressure recently. As you can see from the chart, the stock has shown volatility, and over the past few weeks, there has been a clear downward trend. While Tesla is still one of the most valuable companies in the world, the market is beginning to reassess its expectations. So what exactly is this massive news? The big story revolves around a shift in investor sentiment. For years, Tesla has been treated as a high-growth technology company, not just a car manufacturer. This allowed the stock to trade at very high valuations compared to traditional automakers. But now, investors are starting to ask a different question. Is Tesla still growing fast enough to justify its premium valuation? Let's break this down in simple terms. When a company is priced very high, it means investors expect strong growth in the future. If that growth slows down even slightly, the stock can fall sharply. And that is exactly what is happening with Tesla right now. The first major factor is slowing growth in electric vehicle demand. Tesla was once the clear leader in the EV market, but today competition is everywhere. Chinese companies like BYD are growing rapidly. European automakers are launching new electric models. Even traditional U.S. companies like Ford and GM are investing heavily in EVs. This increased competition is putting pressure on Tesla. To stay competitive, Tesla has been cutting prices. While this helps boost sales, it also reduces profit margins. And profit margins are very important for investors. In the past, Tesla had some of the best margins in the auto industry. But now, those margins are shrinking. This is a key reason why the stock is facing pressure. The second factor is valuation concerns. Tesla's price-to-earnings ratio is still very high compared to most companies. This means investors are paying a premium price for future growth. But if growth slows down, that premium becomes difficult to justify. Historically, we have seen this happen many times in the stock market. Companies that were once considered unstoppable can face sharp corrections when expectations change. This happened during the dot-com bubble, and we have seen similar patterns in recent tech stocks. Tesla is now at a point where expectations are extremely high, and that creates risk. The third factor is uncertainty around future projects. Tesla is not just about cars. The company is working on several ambitious projects, including autonomous driving, robotaxis, artificial intelligence systems, and even humanoid robots. These projects have huge potential, but they also come with uncertainty. For example, full self-driving technology has been in development for years. While Tesla has made progress, it is still not fully ready for widespread use. If these projects take longer than expected, it could impact investor confidence. And when confidence drops, stock prices often follow. The fourth factor is the macroeconomic environment. Interest rates are still relatively high. This is important because higher interest rates tend to reduce the value of growth stocks. Why? Because future earnings are discounted more heavily when rates are high. In simple terms, money today is considered more valuable than money in the future. Since Tesla's valuation is heavily based on future potential, it becomes more sensitive to interest rate changes. At the same time, global economic uncertainty can impact consumer demand. Cars are expensive purchases. If consumers feel uncertain about the economy, they may delay buying a new vehicle. This could affect Tesla's sales growth. Now let's step back and look at the bigger picture. Tesla is still a highly innovative company. It has strong brand recognition, advanced technology, and a loyal customer base. But the market is no longer willing to give it unlimited optimism. Instead, investors are becoming more realistic. This shift from optimism to realism is what often drives major stock movements. Now let's talk about what this means for beginners. If you are new to investing, there is an important lesson here. A great company does not always mean a great stock at any price. You need to consider both the company's performance and its valuation. Tesla may continue to grow, launch new technologies, and remain a leader in innovation. But if the stock price already reflects extremely high expectations, even good performance may not be enough to push it higher. This is why understanding valuation is so important. Now let's consider the bullish case. There are still many investors who believe Tesla's best days are ahead. They argue that Tesla is not just a car company but a technology platform. If Tesla successfully develops autonomous driving, it could create a completely new business model. Imagine a world where Tesla cars operate as robo-taxis, generating revenue without a human driver. That could significantly increase the company's earnings. Similarly, Tesla's work in energy storage and AI could open up new opportunities. And then there is Elon Musk. He has a history of achieving ambitious goals, even when critics were skeptical. This is why Tesla continues to attract strong interest from long-term investors. So where does this leave us? Tesla is at a crossroads. On one side, there is immense potential driven by innovation and future technologies. On the other side, there are real challenges, including competition, margin pressure, and valuation concerns. The massive news we are seeing today is not about Tesla failing, it is about the market adjusting its expectations, and this adjustment can lead to volatility. For investors, this means one thing. You need to be careful, informed, and realistic. Short-term movements can be unpredictable, but long-term success depends on understanding both the risks and the opportunities. To summarize the key points, Tesla is facing increasing competition in the EV market. Profit margins are under pressure due to price cuts. The stock's high valuation makes it sensitive to changes in growth expectations. Future projects offer huge potential, but come with uncertainty. And macroeconomic factors like interest rates are adding additional pressure. In the end, Tesla remains one of the most exciting companies in the world. But as this massive news shows, even the most exciting companies are not immune to market realities. That is it for today's episode of PyUncut. If you found this analysis useful, stay tuned for more deep dives into the biggest stories shaping global markets. See you in the next one.